Does it drive you a little crazy or crazier that the Federal Reserve has such control over the price of gold and the price of silver? But are we at an inflection point where the actions of the Fed in the coming months and quarters will actually be very supportive to the price of silver and to the price of gold? It feels like we're entering that phase right now, and we need to talk about that because it could be an exciting time to be invested in silver and gold. Let's do that right now. We're going to talk about this big shift in the Fed, but first, this morning, the price of gold and silver are getting clobbered because good employment numbers came out from ADP, not even the official numbers, which we'll get tomorrow, but these preliminary good numbers from ADP are signaling the economy is strong. Remember, employment is a lagging indicator. That means it takes months or quarters for weakness in the economy to show up in the employment numbers. So the fact that the employment numbers were good from ADP doesn't necessarily mean that the economy is doing too great, because we're getting many signals to the contrary in that regard. And those signals are more leading indicators or more up-to-date indicators. Now, let's talk about the Fed, right? The big news this week, the big news out of the Fed was they released their December meeting notes to the public. And guess what? There were really no big surprises. It was all what people expected. The feeling that I think the investors are starting to get, and the feeling that I'm getting, and I don't know how you're feeling about this, but it feels like the Fed has reached peak hawkishness. Like they're like the Wizard of Oz behind the curtain, and they've pressed every single hawk button that they have. Maybe they have more. Maybe they can surprise us, right? But it sure feels like they've done the hawkish move to the greatest extent that they possibly can, and that now that pendulum has stopped swinging that way. I'm not going to say it's swinging back to the more easy money dovish side, right? It hasn't yet. But just the fact that it stopped swinging to the hawkish side, and as this economic weakness starts to filter through in the coming months and quarters, they're going to have to kind of back off this hardline hawk, we're tough bravado that they've been up to for the last, year and a half? And as they do that, the dollar will go down and the price of the metals will resume their march higher. And here's something really interesting that hardly nobody talks about, but we talk about because we like to dive a little deeper. And if you like to dive a little deeper and you enjoy joining me in Ron's Basement, I sure enjoy having you here. There's only one you. You are special. We are a sliver of the population because we do like to dig a little deeper. We do like to talk about silver, gold, and the other precious metals. If you get some value, please subscribe, give the video a thumbs up, share it with your friends. And the herd will soon wake up. They'll remember, oh yeah, Jerome Powell and the Federal Reserve, they're not always right about things. Like, remember a year and a half ago, they were proclaiming to the world, they were selling all of us on the fact that inflation's transitory. And remember, they weren't going to raise interest rates until 2023. Let me remind you, 2022, it marked a year of record interest rate rises by the Federal Reserve. So these guys, what they're saying, they can change it on a dime, and they're often wrong. What is so interesting is that record level of interest rate increases, it was done in an environment with a record level of debt. Whether you look at the level of debt in the world or in the United States, government debt, corporate debt, credit card debt, auto loan debt, student loan debt, there is debt, so much debt, and those interest rate hikes have a much more potent effect because the debt levels are so darn high. That's why 2023 could look very spooky from an economic perspective. Think about it on real simple terms. If you have $1 million in debt that 18 months ago you were paying 2% interest on, and now that rate's gone to 8%, your interest expense has quadrupled. Whether you're an individual, a corporation, a government, whatever the case may be, these interest rate hikes are extremely devastating to holders of debt. And haven't gold and silver kind of proven themselves as good stores of value? Heck, even in 2022, silver was up for the year. Gold was just about even. Look at what the S&P 500, the Dow Jones Industrial Average, or the NASDAQ. If you were invested in tech stocks, you're down an average 33%, but a lot of those stocks are down even more. Look at cryptocurrency. Look at what Bitcoin, the king of cryptos, did last year, down like 65%. A lot of the stocks that are crypto related are down 90% or more. Gold and silver are a good store of value, and maybe that explains why the central banks of the world, yes, those high-level, sophisticated financial folks that rule the financial world, why they hold and are buying significant more amounts of gold. And you know that applies for silver as well, because silver is like gold's favorite little cousin. So, does it feel like to you that the pendulum is shifting, right? That the Fed can't get much more hawkish, that the environment overall for the price of gold and silver are improving? We got to remember, these things, they've been around for thousands of years. Silver and gold have held their value 5,000 years, right? There's all this other unicorn fart dust derivative, financial instruments, crypto this, whatever that's out there. But the fact remains, gold and silver have held their value for all those years. We're going to believe that they're going to continue to hold their value. I'll be here with you through it all. I always appreciate you joining me, and I'll look forward to seeing you next time.